Hello and welcome to today's episode of Pivot to Profit, where we help entrepreneurs just like you keep more of what you make. I'm your host, Pam Jordan, and joining me today is our local tax expert guru, Queen Alexis Sidney.
Hey everyone, how are you today?
All right, we are pumped to chat with you guys today about something called an accountable plan. But before we dive in, if you are a business owner who are stressed about your numbers, you think your bookkeeper isn't telling you the whole story, we are here to help at Pivot Business Group. We do bookkeeping, we do fractional CFO, we do tax strategy and tax filing. We want you to grow your wealth, pay less in taxes, and have a much fuller life with your money that you're making from your business. So if we can help, just go to pamjordan.com. We would love to talk to you and see if we're a good fit. All right, so today's topic is the accountable plan. So Alexis, why don't you give us a tax tip about the accountable plan and we can dive in.
Yeah, so I truly love the accountable plan. The accountable plan allows you to, I say, things that you're paying for in your personal life, that we can say, hey, this can be classified as business usage. You get a reimbursement back into your pocket tax free. So you're paying for this stuff with your personal funds already. So with the accountable plan, you can utilize some things, get it on a plan, get reimbursed tax free, and get deductions on your business books, which lowers your taxable income.
That's
It's a
right.
lot.
I love it. And from the profit side of the house, I just want to say this is a great strategy to help compensate you for your lifestyle expenses that benefit the business. Far too often, y'all, it's one of the biggest mistakes I see is you are mixing business with pleasure. Look, your business is not your personal piggy bank. You need to use your business account for business things and your personal account for personal things. But there are things that cross both ways. But what I want to caution you with is use something like the accountable plan, not your company credit card. We recently had some clients, and I'm like, girl, I love Nordstrom too, but she ain't a business expense. That cannot go on the Amex Platinum. Like we can expense it through other ways. And she had like no lie, like Build-A-Bear on her card and all this. So I was like, okay, Queen, there are some things that are business and there are some things that are personal and there's some things that cross, but do not go crazy. So, word of caution, this is a great way to help you afford your lifestyle, but do not be running your company Amex like it's your personal piggy bank every time you go out shopping. Please, please, please.
Right. I agree. I agree. Funny thing is I had a client who put a Hermes bag on the accountable plan and I was like, let's talk about that. That is not for the business. So
Let-
yeah.
Let's work on it. Okay. So, Alexis, let's break it down. What is the accountable plan? Who can use it? All of the things. Let us know.
Awesome. So yes, the accountable plan is approved by the IRS. It is a system for reimbursing employees. So if you are an employee of your business, we need to classify that because if you are, you can get reimbursed for expenses tax-free that are part of the accountable plan. So I want to go back to the employee part. If you are a Schedule C business owner or sole proprietor, you are not an employee of your company. Therefore, the accountable plan will not work for you. There are other workarounds for get reimbursed, but the accountable plan is not one of them. And then also, if you are a partner within a partnership, you are not an employee of your company. Therefore, the accountable plan does not work for you. However, there are ways where you can get reimbursed. So I just wanted to put that out there. So if you get a W-2, you're an employee. So if that is the case, the accountable plan allows us to look at things such as your home office, car allowances, whether you're doing actual expenses or mileage, you get reimbursed for those things. Meals, business travel, just different things that you may be paying for out of pocket. And essentially, the accountable plan allows you to say, hey, I'm paying for this stuff out of my pocket, but in true, my company reimburses us for these items. So the goal is to keep it quick, is that I say every month you submit a reimbursement report. And what's going to happen is your company is going to, you're on payroll, of course. So your company is going to get that reimbursement report and they're going to pay you your regular wages. So whatever, you get paid in addition to your pay for the job and the hours you work, whatever that number totals to be for your accountable plan reimbursements for the month, you're going to get that as a part of your paycheck, but it's tax free. It's money in your pocket that you don't pay taxes on. So you'll get your paycheck and your reimbursement. And that's that. And then essentially, the company is going to get the deductions for the reimbursement. And keep in mind with the accountable plan, a lot of companies have additional employees as well. So you have to account for them as well. If you do have an S Corp or a C Corp business, if you offer the accountable plan to yourself, you need to offer it to your employees as well. And the same concept, they'll submit a reimbursement report for those things that are included, and it goes on the company books. The money gets into their accounts tax free. One of the things also with the accountable plan is we can set the accountable plan up, but you do need to have, I guess, some sort of agreement with the company. So we can't just, just say, hey, we're doing all this stuff and it's not documented in a company corporate document. So definitely you want to have that in play before you establish the accountable plan and start reimbursing employees.
Okay, I love it. So let me summarize. Big picture, if you are a business owner and an employee of your company, Alexis and I have done an episode on entity types. I can link it in the show notes. But if you are a W-2 employee of your business, so most likely you're an S Corp, not a partnership, not as LLC, single member, but on payroll, this is a tax advantage way to get more money into your pocket. You then need to set up an agreement that says what is expensable and what's not. And you need to open it up to your other employees. And then on a monthly basis, submit essentially your expense report of things that qualify under your accountable plan. And then on your pay stub, you get the line item that says, here's my salary. And then you get a nice line item that says reimbursement. And the reimbursement line item, she ain't taxed, friends. That means money right back into your pocket. And I actually have this set up with our company. And so when my team travels for events, they submit their airline fare. We're actually going to an event and we have a certain outfit that we're all going to wear. And so they're submitting their receipts for their hot pink jacket and their airfare tickets. And that reimbursement is coming back to them through their pay stubs. So this is huge, you guys, because we have clients that do thousands of dollars a month through an accountable plan. So Alexis, let's talk about some things that we can actually be part of an accountable plan that benefits the business owner and their lifestyle.
Yeah, so definitely let's start with the most common, typically the home office. So when we work with clients, and we have a template that we track this stuff for monthly and it totals for the year. So that way, that's our proof of record that we actually have this stuff going on if the IRS came looking. But nonetheless, I always start with the home office. So some companies may have a physical location, but as you know, we all work from home and most of us have home offices somewhere in our home. So I always start with a home office. What we do is we look at the total square footage of your home and then the square footage that you use designated for your home office space. Some people have storage, they use their garage, so we account for all of that. And what that does is it allows us to get a percentage of what you're eligible to be reimbursed for your home office. So then we look at things like, okay, you all know we probably pay rent for our homes if we're renting or mortgage. Now, while we can't write the mortgage payment off, I wish we could.
For real.
We can't. But we can consider the property taxes for the year and the total mortgage interest for the year as a expense. Your utilities, things that you're paying for, so cable, internet, gas, like all of your utilities will go there. If you have like maid service, pest control, like we're looking at everything that you come out of pocket for the home. And then what happens is you get a percentage based off of what you use for the home, and that's reimbursable to you. So on average, I see clients with a home office reimbursement monthly, give or take, just depending. Some clients have really huge homes, they're fortunate. But on average, I see like a reimbursement of about maybe 300, give or take, as max as like 900 a month, just depending on the client home and their usage. And so that's money like you're already paying for your home, but you're getting that back into your pocket tax free. So that's awesome. The next thing we look at as well, some of the common deductions is if you're paying for your personal cell phone out of pocket, your company can reimburse you for that. Also, medical insurance, if you're an S Corp or more than a 2% shareholder, any premiums that you pay, you can get reimbursed. Also, travel, meals, if you're paying for that stuff out of your personal pocket, you can get reimbursed. This is kind of the strategy piece because some clients say, hey, my personal card gives me better points than my business card. So they're trying to rack up on those points. So it may be advantageous for them to use the personal card and not like commingle and all that stuff. So use the personal card, but also at the end of the month, put that stuff that was business related on the accountable plan. So you got your points, which you want, but at the same time, this stuff goes on to the business books as a deduction and you get your money back. So it's a clean transaction. So those are the common things that I see a lot of the travel, if you pay for any professional, memberships or things to that nature out of your pocket, the company will reimburse you. We cannot double dip. So if it's on the business books already and the company is paying for it, we can't say, hey, I'm going to put it on my accountable plan so I get double the expenses. We cannot do that. But some of I say fun stuff because that's all like the traditional, the common, but some of the things that you can also put on your accountable plan. I know us ladies, we love to shop and get clothes. Now, I'm not saying be that client that went and got the Hermes bag and said, hey, the company is reimbursing me. But however, if you are doing stuff for the business, so let's just say I'm on content shoot heavy for the week. I got to get makeup every day. I'm doing content every day. I'm doing a photo shoot for branding. You can write that stuff off if you pay for it out of your personal pocket, because sometimes the business wouldn't necessarily cover that. You will pay for it personally and you can get reimbursed. So anything related to like your professional appearance, clothes are kind of iffy. There are times where, like, we're going to an event that Pam mentioned, and we have to dress a certain way and get attire to be in the presence and be branded. We can write that stuff off. But if it's just like, hey, I'm about to go internet shopping today and buy some business clothes because I just need to look good for my clients, we can't do that. But if it is for an event or a special occasion or something that
What
I
about a
had to go
photo
do
shoot?
this,
Like, what if
yes,
I
photo
needed
shoots.
professional photos and I needed like a suit and all of that? Does that work?
It does, but the IRS does get a little tricky when they say, hey, can you wear it again? So that's where the what if comes in. So I do have clients that will go buy clothes and they'll just donate them after. They have a kind heart.
Okay.
Yeah. But dry cleaning for your branded clothes and anything that has your company logo on it. So if you want to buy a bunch of Pivot merch and wear it every day and go get it dry cleaned, you can get reimbursed for that as well.
I love it. I've got
So
a buddy that he has custom suits, and all of the suits are embroidered with his company's logo. Now, it's not as obvious color wise, like it's the same thread count, but like color and stuff. But if you look like the back of his jacket, it'll have his company name embroidered on there. And I'm like, all right, it's there. Like, fight that fight with the IRS.
No, right. That's cool. Another thing to keep in mind for your accountable plan, especially for us with children, I have kids. So if you're doing like a company event or you're traveling for business and you had to get childcare while you were working, you can put that on your accountable plan so that you can get reimbursed because it is a business expense at that point. Now, keep in mind, not if we're working our regular job at home, you have to be traveling for business to take advantage of it. So definitely keep that in mind. If it's business related for an event or travel, you can get that reimbursed. And then also, one of the things as well is if you use your personal credit card for business expenses, so sometimes you may have an annual fee or interest or bank fees or something related. You can get reimbursed for some of those things as well to keep in mind. So that's another, game changer.
Okay,
And
what
the other
about
one,
health and wellness? This is a fun one.
oh yeah, I didn't even talk about that.
Come on, girl.
Definitely health and wellness. Now you can put on your accountable plan for the company that, hey, we want to pay for wellness for our employees. So gym memberships and things of that nature as well. You can have that as a part of the plan and say, hey, we'll reimburse you for your gym membership or wellness because we have an initiative in the company that we're promoting that. As long as it's for all employees and not just the owner, we definitely can add that as well.
What else? What else?
One more that I can think of outside of the traditional is tax prep fees. So I know that most businesses will cover the corporate tax return. And essentially, the business may not pay for your personal tax return or probably shouldn't. I don't know. But nonetheless, if you are paying for your personal tax return out of the pocket, the 1040 portion of it, not the corporate side, you can get reimbursed because essentially your business flows to your personal tax return and you can get reimbursed for that as well. So most people have the business stuff done and it's handled. So that was just something I thought of when I was like, what else can we do? What else? I want to find everything.
I love
So
it.
that's what I have. That's
So, for a business that has an accountable plan, on average, how much money are you seeing that they're reimbursing themselves on a monthly basis?
Yeah, on a monthly basis, with everything, I would say on a smaller scale, I see some clients do about maybe $650. On a higher scale, I've seen some clients do about 1,200 to 15 on average. So definitely you can utilize this. And the beauty of it is, especially as S corps or people who are S corps that don't have multiple employees, just like you're kind of on a smaller scale business, you can really strategize with your payroll because that's another conversation we have with clients. Because it's like, hey, if I know my reimbursement plan is going to give me on average, let's just say $1,000 a month, and that's tax free, is there a way I can reduce my reasonable compensation so that I can reduce my payroll taxes and I can reduce, my taxable income on the W-2 and all of that stuff because I'm getting, let's just say, a free $1,000 a month or so. So that's something to also consider when you're doing the accountable plan, as well. But if you have a lot of employees, it may not work, but for our smaller companies, definitely is something to consider as well.
Yeah, and I love how the accountable plan can be part of the owner's compensation. And remember, we talked about reasonable comp on other podcast episodes and making sure that your W-2 is not too big because then you're overpaying in taxes. So this
Right.
is another way to get more money into your household. So if you pay yourself through the accountable plan 1,500 a month, that's $18,000 a year tax-free into your household to account for things. To help you pay for bills in your own house. And that's income to you that's not taxable, but it's a business expense. So think about if you start stacking these, which is what we as tax strategists do. You have the accountable plan. That's an extra $12,000 coming in. You have your kids on payroll. One kid, that's an extra 15,000. The Augusta rule, that's 14 days a year. That's $14,000. All of a sudden, you've got an extra $30,000, $40,000 coming into your household tax free because we're stacking these tax strategies. So understand that as your business grows and your profitability grows, you don't have to just bump up your salary. You can use these amazing strategies to get the money into your personal bank account tax free. And all of these strategies that we're talking about reduce your business taxable income because they're
Right.
all business legal write offs. So it's amazing how you can have your salary, but then you can have all these other strategies stacking and get an extra 30, 40, $50,000 in your household every year.
Right. It's amazing.
As far as the accountable plan, there is some paperwork because we do need to be compliant. So you talked about that we need a agreement or some sort of document with our business that says this is what our accountable plan includes. This is what we count for. What other documentation do we as business owners need to have to make sure that we're compliant with this tax strategy?
Oh, definitely. So just having a plan in place, that's our binding document. Other things that we use is an accountable plan template or tracking worksheet. So essentially, we should be able to have that for all employees who are part of the accountable plan, where we can go in and see the expenses month by the category. And then we should be able to, you should have a payroll system in place as well. So the payroll system, we should be able to go into the payroll system and match the dates on your accountable plan template to match that payroll. So essentially, that's all you really need in place as far as documentation goes. You definitely should have a submission process and a reimbursement system like structured on how you want to do it as far as frequency and timelines. So that should be established within the company guidelines. Just to put in place, I know the IRS is really getting heavy on the accountable plan. So I always tell clients that we definitely want to do our reimbursements timely. So within a 60-day time frame. So just keep that in mind and have that documented in your plan also.
Okay. So it comes down to ordinary and necessary. Those seem to be repeatable IRS terms. So if the expense that I incur personally is ordinary and necessary and benefits my business, it could potentially be part of my accountable plan. But I need to talk to my tax strategist to say the Hermes bag, probably not, but the custom teal suit that I'm going to use because teal is our pivot color that I'm going to use for photo shoots and stage time that I'm not going to use outside of business, that could work.
Yes,
What
correct.
about a
Yeah.
teal Hermes? Can I get a teal Hermes?
I don't think so.
Next time. Maybe one day she's going to say yes, y'all, and I'm going to go shopping.
Maybe if we get it embroidered with a pivot. I don't know. I have to figure that one out because they have a gift limit of $25. So,
I don't think I'm willing to have someone embroider a $20,000 bag. All right.
that part.
So, Alexis, we help a lot of clients with the accountable plan. Can you give us an example of a client that we do this with and how it works for them?
Definitely. So we have a client off the top of my head that I can think of. Can't say no names, but this client has a huge home and they use multiple parts of their home, one for storage, one for filming and podcasts and studios, and then a portion for the actual home office. So they didn't know about the accountable plan when we started working with them, but being able to work with them and say, have the conversation and really deep dive, like, what are you using your home for? And they just started listening. I'm like, okay, this is solely business. Yeah. Okay. So for that client, it was definitely a win because they had a larger than normal square footage usage of the what they use their business for the home. So that helped them and it helped their accountable plan to be reimbursed more. So for that client, on average, I saw like a $2,000 per month reimbursement. But considering larger home, larger costs, larger, fees per month, it helped.
Yeah.
So we've helped them to identify like the home office and really diving into having a strategy and making sure that we account for everything that we can, especially for the home office. Another way that I also with this client help out is the medical portion because they weren't capturing medical as a premium. So they had a huge family and that helped, them to, offset some of the costs there, but definitely for the shareholders, they got reimbursed for their premiums. So that was a game changer there. And another thing with the client was just really diving more into how they use their personal spend expenditures because they did a lot of just like meeting with clients and meals and things to that nature. So they had a lot of personal expenses that they weren't running through the business, and I'm like, what are we what are we doing here? Like we that's a part of the accountable plan. And then also the wellness thing as well. Like they did a lot of wellness treatments and gym stuff. So we was able to get that on. So all of that total, like I said, to about 2,000 per month times 12. We pretty much can say, hey, our home office, our utilities are kind of on average. It just depends. The summer months it goes higher. We all know that. But on average, when you're doing that 2,000 times 12, like that's definitely a huge win, for a client. And it definitely impacted them and helped to bring down their tax bill. And they were really pleased with it because it's like, I didn't know I can do this. I
Yeah.
didn't know I could do it. Now, the hard part was just making sure you're doing it monthly where you're actually have the system in place and making sure it gets on payroll and getting the money into your pocket. That's the hard part. But the easy part is really identifying. But nonetheless, they were happy because those were things that they weren't strategizing on prior to working with us, and it helped to reduce their tax liability to the fact where with all the strategies we did, they ended up with a nice refund.
Yeah.
So
Even
that's
though
a
they had
win.
a large multi-million-dollar profitable
Yeah,
business.
yeah, definitely.
That's what I'm saying. Look, the more money you make, the less you pay in taxes. Do not let the tax man fool you. If you have cash, there are strategies out there. All
Right.
right. So, Alexis, this has been fantastic. Hopefully, it's opened the eyes for a lot of business owners. Let's wrap this up with some key takeaways. First off, this is a tax-free reimbursement. So, this is money into your pocket tax-free through the accountable plan. You submit your expense report through the accountable documents to your company through your payroll gives that money back to you. It is tax-free. I'm going to say it again. Tax-free money into your pocket, people. Like there's no reason why you shouldn't be doing this if you are an employee of your business. The next takeaway is make sure you have proper documentation. ChatGPT, if you want, get a lawyer, have your tax strategist create a state templates. We have templates that we give our clients, and our tax strategists are like, okay, I see you fill out your accountable plan, but I don't see that you reimbursed yourself. Like, let's go. So make sure that you are keeping up with the paperwork and that you're doing it in a timely manner. And then as a last point, this accountable plan is a huge strategy, but you need to make sure that you're an employee of your company. So don't start running off because you're a partnership or you're a sole proprietor and think that you can implement this strategy. Make sure that you have the right entity structure so that you can utilize this tax strategy. All right, Alexis, anything else to wrap this topic up?
Yeah, one thing that popped in my mind, we always or seem to get clients where they don't have the accountable plan and they start with us midway through the year or possibly year end, and it's like, I didn't take advantage of this. So I know the IRS law states that, or what they say is a 60-day time frame for reimbursements. However, do keep in mind that a lot of times you'll see owners doing distributions from the company. So the IRS does not frown upon because you took the money out of the company, but it could have been for your accountable plan reimbursements or just different things of that nature, but it wasn't done properly on the books or it wasn't accounted for in a template. So if that is the case, you are allowed to go back and refix the books up to reclassify things so that you can take advantage of the strategy. However, it does need to be within the tax year. It can't be something from 2023. So I just wanted to put that out there for those clients who may be interested in going back and kind of fixing things up to be able to take advantage of accountable plan if they have not been doing so.
Yeah, that is a good call because I can think of one client that we brought in Q3 of 24, and they had not had a tax strategist in the past, and your team worked with them, and they got thousands of dollars of distributions reclassified because we were able to implement this. But the key here is make sure that you're talking to a tax professional and that you're doing this properly. This is not a strategy that you want to try and do on your own and wing and then IRS come knock on the door and be like, So make sure that you have someone on your team, a tax strategist that's helping you. And if you need help with that, please go to pamjordan.com, talk to our team. Alexis has a team of tax strategists and they are ballers and they are here to help you implement this and succeed with it. So thank you, Alexis, for sharing this amazing tax strategy. It's one that we use in our company and benefits our employees as well. So I love your brilliance on this one.
Thank you.
All right. So, look, if this is helpful for you, please make sure that you subscribe, Apple Podcasts, Spotify, YouTube, wherever you listen. Remember, it is not what you make that matters, it's what you keep. We'll see you next time on Pivot to Profit Podcast.